Hey everybody, it's David Purdy here again. Today I'm with my friend Tyler Schwende. He's a mortgage broker
Hello.
with Safebridge Financial. He has 8 years of experience. I've done many deals with him, and he's a go-to for me for any mortgage questions. And he's one of a handful of people that I trust with my clients for help with mortgages. So Tyler is here today to talk to us about the impact that COVID-19 has had on mortgages, as well as our record low interest rates and some of the new changes with the rules coming on July 1st with the CMHC and what they really mean for consumers. So I guess without further ado, we'll start. Tyler, what have you seen with the impact of COVID-19?
Awesome. Well, thank you for having me first off, David. This is great. So COVID, like we kind of were discussing before, it kind of had two stages of it. So we had, at first in March and April, we saw a real significant pullback of buyers and people kind of moving away from the market. But as rates fell, we did have a lot of refinance and transfer applications come in to take advantage of those low rates. Now, as the markets have started to kind of open up again, people are out looking for homes. Refinances are still strong with rates still low, but we're seeing more activity on the purchase side of things.
Right, right. And these interest rates, these are the lowest interest rates I can recall. Have you ever seen anything like this?
I haven't. I've been doing this for 8 years. I haven't seen rates lower than this. I think I don't know if this is the lowest, but pretty close to the lowest historically.
Wow.
So, I mean, we're talking 5-year fixed rates if you're looking to buy less than 20% down around the 2.25% mark. And now we're at variable rates that are, below 2%. So this is a very uh, great time if you're a borrower to take advantage of these rates.
Right. And do you think this is going to stick around for a while?
The economists are saying it will. We're looking, at, I mean, the Bank of Canada is projected to say, we're not going to do very much with the key lending rate that impacts variable rates. And it sounds like on the bond side that impact fixed rates, it's still at historical lows as well. So, I mean, until the economy really starts to recover, we'll see rates down this low for quite a while. Does that mean 6 to 12 months? Probably, but if we do see some recovery happening, the rates could start to come up.
Right, right. Now, there's been a lot in the news about the CMHC changing some of the mortgage rules for insured mortgages and how it's going to affect affordability. Can you comment on that at all?
Yeah, so CMHC kind of brought this sledgehammer in, basically saying that we think that home values are going to come down by 9 to 18% in the next 12 months because of COVID. Now, is that actually the case? What's happening and what's trending? Probably not. And because of that, there's the other two default insurers. There's actually three total default insurers, CMHC being the most prominent. But the other two, Genworth and Canada Guarantee, both said we don't agree with CMHC's prognosis for the future on home values, and we don't want to restrict borrowers from being able to get into their first home or second home, whichever. So they decided to not follow suit with CMHC's criteria changes, which means that just to kind of run through those changes with you, the minimum credit score now for all borrowers with CMHC is 680. For Canada Guarantee and Genworth, it's actually only 600 still for an insured purchase or transfer. As well, the main one that was hugely impactful is the debt service ratios. They basically reduced them down from their original levels, so it in effect causes a 10 to 12% reduction in purchasing power if you have a CMHC insured mortgage. If you've got Genworth Canada Guarantee, then there's no impact with the qualifying levels. But that was the biggest and most prominent one of CMHC's changes, because, I mean, 10% is a huge amount to almost just lose off the top, because they're afraid that, they're basically trying to say, we want you to qualify for 10% less because we feel values in the future are likely going to be 10% less. So they're trying to basically, hedge against, like in any insurance company, they're trying to hedge against risk in the future.
Right. But it doesn't sound like there's a whole lot of agreement as to what the future is going to look like.
That's right. I mean, it's all over the board. I mean, we have TD economists on one end saying 10% appreciation. We've got CMHC on the other end saying, 9 to 18% reduction in home values. It is so widespread. No one knows what's going to happen. But I mean, you know as well as I do, David, that we're seeing people extremely active. We're seeing multiple offers on properties.
Hmm.
The market, it's still a heavy seller's market. So, I mean, there's still values are in my mind, and from what I'm seeing, are continuing to rise, albeit maybe not uh, earlier this year or last year's levels, but it's there's still a lot of activity.
Great. Well, thank you, Tyler. I appreciate you answering some of those questions. I know a lot of my clients have been coming to me with those questions, and it's always great to have an expert in the area kind of clear things up for us. So, and
Happy
if
to
you
help
want to go
back you
ahead
up on that.
and throw your information out there for anyone who's watching who might
Sure.
be interested, go ahead.
Absolutely. You can find me online. You can see on the screen here in the corner there, but Tyler Schwende. It's tylerschwendemortgages.com, or you can find me online. I think my Instagram handle, if you want to find me on there, is TS Mortgages. So add me on there if you'd like, and we can send me a DM. We can start a conversation. I'd be happy to answer any further questions you have.
Great. Well, thank you very much. And if anyone has any questions about mortgages or real estate in general, always feel free to shoot me an email, and I can send you Tyler's way, or can send you to another great qualified mortgage broker. Thank you very much. Everyone stay safe and stay healthy, and I look forward to chatting with you all.